In this presentation, we will discuss interest income. We will still be up top in our tax equation. We are considering the income line a component of the income line. Interest income will generally be reported on a 1099 INT. The concept of interest will be that if we have an investment somewhere, we may be accumulating interest on it. For example, if we have money in the bank, we're not going to be getting too much interest typically on our checking account because we have the ability to take the money out. Therefore, interest rates will be fairly low in terms of the money we should receive. However, if we put money into a more long-term investment with a financial institution, we can get a higher interest rate, and that would be the concept of interest. So if we restrict our money in some way, typically having some type of loan or putting it into a savings account where we have more restrictions than we would with a checking account, we may get some interest on it at this point. Now, the interest will typically be reported then, or is required to be reported by the bank, the institution then providing the 1099 INT. So typically, usually, under most circumstances, we will have a 1099 type form that will tell us what we need to be reporting in the form of interest, typically from banks, savings and loans, credit unions. Some interest income will be tax exempt, and this is generally going to be tax exempt interest from some type of like government investment. So we have government investment in something like treasury bonds or something like that. We may have interest that could be tax exempt. Again, this is something that should be reported to us. We should have a 1099 on it. We may need to put it into the return, but it wouldn't be taxable. It would indicate then on the 1099 form, this is tax exempt. We put it into the tax return just as an informational purposes, not actually part of the tax calculation because it would be tax exempt and therefore basically not included in the calculation, at least for the first line of basically our tax equation, the income line. So this is what a 1099 INT would look like. You can find this on the IRS website. Note that if you get something from a bank or financial institution, it may not look exactly like this. We may not have the same size or the same shape of it. However, we'll have the essential information in it. So that's going to give this essential information, including what the interest income amount was, and then the payer information. And then if there's any kind of box in here that you're unsure of, you don't know what that means, then you can go to the forms, or usually on the back of the form, you'll have the instructions for it. So although the form will look different, the numbers will typically be the same, and therefore you can look at the instructions typically on the back of the form, or if you only have the face of the form for whatever reason, you can go to the IRS website, look up the instructions for the 1099 INT, and line up the actual name of the box with the instruction form to do some research within it. Notice we have down here box 8 where we have the tax exempt interest in our form 1099 INT. Other interest that must be reported, this is going to be less common but something to keep in mind. Receipts from an installment sale, imputed interest on loans made at below interest rates. So if we made a loan, and again this would be kind of unusual, but if there's a loan that's going to be involved, one way to kind of manipulate the loan for one reason or another is to not explicitly say that there's an interest rate. But if there's a long-term loan, you would think that there should be an interest rate and that it's worked into the loan agreement in some way. So you'd have to impute the interest rate under those circumstances. Again, somewhat of an more of unusual type of circumstance that would happen. Interest on bonds sold between interest dates. So how do we report the interest income? The interest income, this is page 1 of the form 1040. You'll see on line 2A, so this is up in the top part of our tax equation. We have the line here, and we have in 2A, we have the 500. That's in the tax exempt interest. And then in line 2B, we have the 1,600. So note, we have the 1,600 that is included, and that's going to be the amount that's going to be included in the taxable income, the total income down here that we're ultimately going to be in the calculation of the tax. What's not included in here is that $500. Why is the $500 on the return then? It's for information purposes. So we put it for information purposes, the tax exempt amount, but we're only going to be including in our tax calculation the amount that we're actually going to be paying taxes on. Therefore, that amount is being included in our total tax down below. Now, if we have an amount over 1,500, then we not only want the interest income here, but we also want to be reporting it on a Schedule B. If this was the case, if we have over 1,500 Obviously, the IRS seeing that as a significant, more of a significant amount, something that draws, they want more information on over that point. Less than that amount, they're going to say, hey, it's not a big deal. We're not going to need more information than that on it. So if you're over the 1,500, then you have the Schedule B. The Schedule B then will give more detail. We'll have the institutions here. In this case, we only have the one, which had the 1,600. But if we had multiple institutions where there's interest, we would be listing out the multiple institutions that would then have the detail breaking out the amount of the interest income that we see here on line 2B.